Nigeria inflation accelerated at the highest rate in almost 11 years last month, and it comes at a time Nigeria is struggling not to slide into recession, the first of its kind since independence. Now, dealing with shortage in crude oil revenues, pressured exchange rate, and slowing economic growth, can inflation be managed in an uncertain environment? Let's get the perspectives of the Chief Executive Officer, Time Economics, Dr. Ogo Okiti. Good morning to you, Dr. Okiti.
Good morning. Thank you for inviting me.
It's a pleasure to have you on the program. Now, there's been some analysis of the June inflation report, but what do you make of it? Did you expect such an increase? 90 basis points.
Yes, it was, the figure was not unexpected. It was expected that there will be another increase in the rate of inflation from the figure that we saw in the month of May. And the reason is that all the shocks that we have seen since the start of the year, and I'm not talking about since January, which was the last time that we saw the single-digit inflation, 9.6. Since that period of time, we've had a series of shocks. And all those shocks are still working their way through the system. So it was not unexpected to see an inflation rate above 16%. However, I think the first thing to note about this June inflation is that it was the slowest deviation that we have seen since that January. If you look at from February on relating to January, March, April, May, this is the first time that we are seeing a 0.9% deviation from the previous month. So I don't think the inflation figure is as bad as it looks. I think if it remains like this, then we'll see that going forward, it reduces the risk of further volatility.
So, Dr. Okiti, do you think that this inflation, as we're seeing it at the moment, is transitory?
Yes, I think what we are not sure of is when that transition will be complete. The first thing, another thing that we have to note is that since the start of this month, we have not seen any major shock in relation to price. So if we do not experience any further shock, I think that transition should complete sometime soon, perhaps even the next release, which is the month of July inflation. Yes.
So now, do you think that other factors probably also driving inflationary pressures are more structural and cost shock than demand related, for instance?
Definitely, they are structural. If you look at where all the shocks came from, at the start of the year, we have foreign exchange constraint, which actually drove up prices of imported goods and services. That was the first one. It was followed up by the fuel price hike, then the electricity tariff. Then if you also look at the poor harvest situation. So when you look at all these, where all the drivers came from, they are definitely structural. And the good thing about it is that the structural, like I said, we do not expect any further shock. And if we do not expect any further shock, and the government and the central bank is able to manage it through the next 1 month, 2 months, and even towards the end of the year, then we can begin to see that the inflation either stabilizes at this level or even begins to fall.
Dr. Okiti, talking about structurally now, do you think exchange rate adjustments, because you actually mentioned it, coupled with renewed vigor to pursue structural reforms in the energy sector, as we've seen in the last couple of weeks, would aid the economy to win in ways?
Absolutely. Any or any kind of reform that helps drive investment and obviously support Nigerian economic goals, whether in the short term or in the medium term, will be very, very beneficial to Nigeria. Yes. And of course, beneficial to reducing inflation over time. Yes.
Okay. Now, taking a look at where the exchange rate is from Friday to yesterday, Monday, we've seen kind of palpitations, and a lot of people are not very comfortable where we're seeing the currency at the moment. So if the official exchange rate now, for instance, moves closer to the parallel market, do you think it will boost investor confidence? Because we're trying to see how much foreign direct investment Nigeria can bring in at this time. So do you think that will improve foreign investors' confidence and even domestic investors' confidence as well?
I think it will. If you recall my interview last week on this subject, I said that the gap between the market rate and the parallel market, although let's bear in mind that the parallel market is a very, very insignificant portion of the market. But the fact that the gap between those two was still very, very wide, it gave the impression that the dollar, or let me know, the naira has not been appropriately priced yet. That's one. Then secondly, if you recall, there were also restrictions in the market, and some of those restrictions have now been removed. So with those measures, I think it's bound to definitely improve investor confidence. And I think also that most of the people that are waiting in the wings, whether it's regarding to foreign portfolio investment, whether it's regarding foreign direct investment, whether it's regarding the remittances coming to the market, when you look at all these portions of sources of supply for foreign exchange, I think this will be good news to them, and they will have confidence saying that, okay, this market going forward, they think that there could be some improvement in terms of liquidity, because they could probably interpret it as something that is more transparent. Yes, I think it will be good for investor confidence.